Welcome to the exclusive premiere of the Black Market panel discussion by Piranha Profits. So I'm Chi Keng, the host for today, and I'm extremely excited to have the opportunity to sit down with some of the best in their respective fields, regardless whether it's investing, trading, options, or even crypto. So in this panel discussion, we have a myriad of different topics covering market updates, talking about hidden opportunities, and more importantly, I'll definitely get the mentors to talk about some of their profit maximizing strategies they are currently employing in today's market. So if you're interested in making bigger profits alongside our mentor, be sure to grab your free tickets to our upcoming live event, the Black Market 2023. Trust me, you wouldn't want to miss this. Oh, and I've just received news from the team. If you sign up with the link below right now, you'll get Adam's November stock market secrets that is usually worth $100. But right now, you're going to get it for free. So in the studio today, I have the highly sought after mentors from Piranha Profits. So all of them have managed to build their portfolios to 7 or even 8 figures through very different investing styles and methods. So of course, first and foremost, we have Adam Khoo. I believe most of you have already known him, so I'll move on to the next one. Of course, I'm just joking. So Adam himself is one of the brightest investors that I've come across. So he has such a deep appreciation and understanding of the market that is able to break down complex topics into simple frameworks for people to understand, which is probably why he has more than 1 million followers on all his socials combined. So Adam, maybe you want to give a quick introduction of those who don't know you yet.
All right, so I'm Adam Khoo. I'm the founder of Piranha Profits. And I've been investing and trading in the financial markets now for over 30 years. So before you were born, CK, right? And so currently I'm a full-time investor and trader. I manage a stock portfolio of about over $12 million right now. And the bulk of my investments is actually in the US markets, where I use a value momentum investing approach, where I basically invest in very high quality stocks and I buy them when they are significantly undervalued. And then I create additional income and returns by trading stocks and options around my positions. I also have got another smaller portfolio where I invest in more dividend stocks to get some regular dividend income in the Singapore listed banks and some of the selected REITs. I've also been coaching and mentoring people all around the world, in fact about 140 countries for the last 18 years to become self-directed investors and traders, right? So year to date, my investment portfolio is up year to date 29%, and for the last 12 months up 41%.
Thanks, Adam. I think that's really great performance compared to many of the indexes out there. So I think moving on to our next mentor, which is Bang. So I think Bang is probably one of the most ingenious options trader that I know of. So he himself, he's experimenting with a lot of new option strategy, constantly pushing the envelope, and also devising and sharing these strategies so that his students can earn money alongside him. So Bang, maybe you want to share a little bit about those who don't know you yet.
Hey, hi everyone. This is Bang Pham. I'm the option trading strategist at Piranha Profit. I've been trading for 23 years now, of which 18 years with option trading. And I have like 7 years of option coaching and training as well. I'm using options right now only for trading in the US stock markets. I even use options as a proxy for my long-term investment in some of the great companies in the US stock market as well. So I use different strategies that benefit from the market going up, down, or even not anywhere. So we call it directional or non-directional trades. And my results so far has been great. I would say up 57% year to date for across my accounts. And yeah, so that's how I've been doing.
Thanks, Bang. So I think I also wanted to take the time to congratulate Bang. So recently, he has just retired. So maybe you might, let's clap. So I think you might just want to share with the audience, or if I can ask, actually, at what age are you this year when you retired?
I'm 54 years old now.
54?
Yeah.
So I think the statutory retirement age in Singapore is 63. So you retired around 9 years earlier. So maybe you want to briefly share with the audience on what was your thought process, why now, and could you have retired earlier?
Yes, I could have retired like 6-7 years ago when my other income exceeded my salaries, right? But I chose not to because First of all, I love the job that I've been doing. So that's one of the position in Procter & Gamble when I was the group director in one of the business units. And I love my team there as well. And just for all respect, right, P&G is a great company when you want to work for. But at the same time, I also have another passion, which is option trading when I do at the night time. So when I was younger, it's still okay for me to juggle between the two jobs. But now I'm getting older, it's tougher to manage both. So I decided to dedicate my time now for one that I have a lot of passion for, which is option trading and training. And I also want to spend more time with my family. And more importantly, with Piranha Profit, community is growing and expanding very fast. There are thousands of students in the community who ask questions, and I really want to help them, handhold them and coach them how to get to the level that they can earn their income for themselves. So that's really my passion going forward.
Right, Bang, I think just now you floated the idea that your investment income has already exceeded your own salary. May I know at what age do you manage to achieve that feat?
That was when at 47 years old.
47 years old.
Yeah.
So yes, for those of you out there, stay tuned as I'll get Bang to definitely share some of the strategies they've used to achieve such a great achievement. So I think last but not least, Alson, which is our third mentor. So he's a former proprietary trader that has also managed to come up with his own trading strategy that has allowed him to profit more than $3 million from the stock market itself. So Alson, maybe you want to share a little bit to the audience of your background and a little bit of your experience.
So hi guys, my name is Alson and I'm the trainer for the price action manipulation course in Piranha Profits. So I started my career as a proprietary trader. In fact, I was the senior trader for a boutique trading house. So what does a proprietary trader do is that we actually trade a proprietary fund from the company, and then we have our individual book. So you actually own your own, be responsible for your own trading account, right? And you will get about a 50% payout from the net profits from your trading account. So that was how I started my career. I learned the ropes from a lot of top traders in the industry, and a lot of mentors as well. And I learned about the tricks and the secrets about the markets when I was in the prop desk. And that's how I created my unique price action manipulation strategy, which I've been using all these years to trade the markets. So in my portfolio, I concentrate more in the US stocks, about 80% US stocks, and also I take opportunistic moves in the China and even the crypto markets as well. And year to date so far, my portfolio performance is up about 40%. And the last 12 months, I managed to achieve about 120% in my portfolio returns.
Right, thanks Alson for sharing. So I think, as you can see, as the mentors give the overview and rundown of their background and their performance here today, some of you might be extremely interested in understanding how to model after them as well, which I will definitely get them to share in the later part of this discussion. So I think maybe just to kickstart the entire panel discussion as well, I might provide a very quick overview of the markets in general, several of the few markets, and then I'll get the mentors to comment on what their upcoming views are for the past year. So 2023 was actually a rather eventful year. It came on the back where back in 2022, we have so many headline articles talking about an impending recession being 100%, and then you see the stock market continue climbing. And just citing a few of the numbers, the SPY is up 11% year to date, QQQ 36%, the MSCI World Index is at 11.5%, and China continues to be a laggard, which we'll discuss later on. The Hang Seng is down around 14% year to date. Even in the crypto space, so Bitcoin, even though it has a recent rally, but it's still down roughly 40 to 50% from its all-time highs. So I think many of these stock market indexes continue to climb on a wall of worry, where you have discussions around a yield curve inversion, an impending recession, and even a high interest rate environment acting as some sort of a gravity to some of these stock performances. So the Fed fund rate started at a year around 4.3%, and it's currently at 5.3%. So it's 1 percentage point higher, or 100 basis point higher. But that said, the stock market continued rallying. And more importantly, a few notable events, 3 in fact. One is that the regional bank actually went down earlier this year. Some of them like Silicon Valley Bank, Signature Bank, second, third, fourth largest bank failure in US history. Secondly, it's definitely the AI boom, where you see a lot of the AI stocks actually had humongous rally. It's essentially the top 7 stocks that carried the entire S&P 500 performance. And last but not least, the unfortunate event that broke out in the Middle Eastern and also the European region between Russia, Ukraine, and also Israel and Palestine. So our heart goes out to all of them. But I think as investors, we should continue staying vested and looking at the things, or looking at the entire market from a long-term perspective. So I think the largest question on many investors' minds today is really what I would quote it as the holy trinity of the markets today. So you have interest rate concerns, you have inflation concerns, and of course, people are asking about recession. So I think I'll just start off, or get Adam to start off the entire discussion on what is your expectations of many of these 3 key concerns today.
Okay, so inflation, now inflation used to be about 2%. And then in mid-2021, it went up to 3%, and then it went up, and then it peaked at 9% in June of 2022, which was very, very high, right? But since then, inflation has actually come down, down to 3.6%, and is now on a downward trajectory. So you got to understand what created that inflation in the first place. So there are many things, but 3 main things. Number 1 was the quantitative easing by the Fed, which means they keep printing money and lowering interest rates. So that could have caused an inflation, all right? Number 2 was a supply chain disruption. So there was demand, not enough supply, inflation. And the third was labor shortage, especially in the US, where a lot of job openings but not enough workers. So that pushed up the wage cost. So all that created the inflation in 2022. Now all that has reversed now, right? So now the Fed is doing quantitative tightening, right? They're reducing the money supply, and then the labor participation rate is going up. More people are going back to the workforce in the US, and the supply chain problems have been resolved. So because of that, inflation has been coming down, and I think that the inflation more or less will be slowly going back down to 2+% pretty soon. Now historically, right, I'll show a chart right here. Whenever inflation peaked and came down, the stock market bottomed and went up. So again, inflation peaked in June 2022, and the market more or less bottomed in October, which was just a few months after that. And that's when we started the new bull market, right? So I think inflation, in the long run, I don't see a problem, because with AI and automation, for example, Amazon is now using a lot of robots to replace people in the factory. So that would reduce costs for businesses, increase productivity, and it's a deflationary effect. So I think long-term inflation should not be an issue to be concerned about, right? Now for the interest rates, there's both the short-term interest rate set by the Fed and the long-term interest rates, the 10-year, 20-year Treasury interest rate. So the short-term rate by the Fed, I think if you ask me, they are done. The Fed has finished their rate hike cycle, okay? And they may even cut rates next year, okay? Now for the long-term rate, it's still going up. In fact, it reached 5%, the 10-year yield reached 5% a few days ago, but it's now back down below that. So I think more or less it's near the top. I don't think it's going to go much higher, and I think from there we're going to slowly stay there or come down a bit. Now, with the long-term rate up, that increases the financing cost of companies. And that doesn't really affect the big companies that we invest in, like Microsoft and Apple and Google. Not affected. In fact, they're still doing well because they have a lot of cash. So they earn more interest income from the high interest rates, and they got very little debt. Okay? But what suffered from the high long-term rate are REITs. REITs got whacked, bonds got whacked, small companies got whacked, and consumer staple dividend stocks got whacked. So once the 10-year yield comes down, which I think it will start next year, then the REITs and the bonds and the small caps will start to rebound. As far as recession is concerned, everyone said we're going to have recession this year. Didn't happen, right? And I'll talk more later why I think everyone got it wrong.
Right.
Yeah.
I think I wanted to also build up on the point where you shared about yield curve the yield curve, right? So I think right now the yield curve is clearly inverted based on the graph, and there's a lot of talking points around yield curve inversion being a forward indicator for a recession. And because there's a recession, stock market will not do well because companies' earnings will get impacted. So do you have a particular read on this yield curve inversion, on whether it will be an issue?
Okay, so so far there's no recession even though the yield curve inverted, right? So I've got two theories, right? So one theory is that we already had a recession. And the recession happened in 2022, quarter one, quarter two. Remember the first 2 quarters of 2022 were two negative quarters of GDP growth, which actually is a technical recession. So actually maybe that was a recession, right? But it was not official by the National Bureau of Economic Research. The second thing is that we actually have had an earnings recession. So in fact, the last 3 quarters, the S&P 500 companies, the earnings growth was negative. Quarter 4 2022 was negative. Quarter 1, quarter 2 2023 was negative. And in fact, this quarter, which is now being reported, is also expected to be negative. So that means the companies already went through a recession and expected to bottom this quarter. So to answer that question, my belief is that the recession already is here and over, right? But it's just not official.
Bang?
Yeah, I'm not particularly concerned with recession either, because the market has a forward pricing mechanism which should have built in on the bad news ahead of time. So by the time the recession comes, perhaps the market has bottomed and ready to rally. So I'm not concerned with that. And even if the recession prolongs for a long period of time, with option trading, I could still make money because I can make money whether the market goes up, goes down, or goes sideways, right? So it doesn't matter for me, right? For the interest rate, I also believe that the interest rate hiking is coming to an end, right? But it could stay there for a longer period of time, right? Well, the way I trade options, I collect money, I collect cash in advance. The premium, I collect it in advance. And that, with the higher interest rate, I earn a better income out of it, right? So the way I trade, and I'm planning to share with the audience during my upcoming webinar on how to construct those kinds of trades, where you collect cash in advance. And when the cash is sitting there, you earn extra interest rate on it. So it's really a benefit with the high interest rate environment. And I really personally, I wish the high interest rate to stay longer. Yeah. The longer it stays, the better for me.
The higher the interest rate, the more profitable your option strategy is actually.
That's right.
Right. I think last but not least, can I get Elson, your own expectations of these 3 questions?
So as a trader, right, when I do my analysis of the market, I focus more on the price action, right? Whether there's a valid trade setup, right? And how I plan my risk management, my take profit target, and so on. So in general, I do not really have I have a zero expectation of what was the macro environment is. I don't really trade on news because sometimes market can still bottom on bad news. In fact, some of my biggest wins in the market in my career has been in times of really bad news and crisis. That's when I actually made exponential profits during such negative sentiment times. So I will be sharing more about how I actually going to manage the current market volatility in my upcoming webinar, where I share more about how I use price action manipulation strategies to trade the markets.
I think what 3 of us have in common is that although we 3 have very different approaches to the market, 3 of us, all our investment or trading decisions have nothing to do with reading news and predicting the economy. It's got to do with watching the price action. Is the price above the 50 moving average? Is below the 50 moving average? Is the 50 above the 150 moving average? Support resistance levels, as well as looking at the fundamentals of the individual companies. And I think if you look at some of the greatest investors, people like your Warren Buffett or even Peter Lynch, they say the same thing. They totally disregard economic predictions because it's a complete waste of time. And we only look at it purely for entertainment purposes.
Right. I think I really agree with Adam's point here. I think when you really understand and try to appreciate the different mentors' investment style and strategy, right? There's really, even though they are adopting different ways of approaching the market, but at the end of the day, as you guys can see from their performances, they all manage to be very good in their craft, and they are able to take advantage of the different opportunities that's presented. But I think riding on the point on what Adam said, even though it's entertainment purposes only, there are a lot of famous names in the industry as well. I think recently Seth Klarman went on the CNBC and said that there was an everything bubble in 2021. And I think there's also Jeremy Grantham and some of the, as you like to put it, some doomsday, I don't know whether you want to beep these or not, to really think about...
Prophets of doom.
Yes, prophets of doom. So I think there is really a very deep concern on the ground, especially for retail investors, thinking about, oh, if there's really an upcoming recession, I'm very scared that my companies will not do well, the profits will be impacted, and how it will be affecting some of my investment, hopefully in a longer time horizon. So I think just to write on this topic, on this macroeconomic troubles around the US today, we have many people saying that, oh, we might be in a new bubble territory, especially when the Magnificent Seven, your big FANG M stocks, plus Tesla and Nvidia as well. So I really just wanted to pose the question, maybe Bang, do you think that right now the US market, or specifically even AI stocks, are in a bubble?
I would not think so. I don't think there's a bubble, and I don't think there's any market crash coming soon, right? Yes, in some pocket of tech companies, there are overvalued companies, and many of them has come down to the earth, recently. But there are several tech companies that are still way undervalued. They have growth, they generate a lot of cash, which is good in this environment. And those companies I would like to continue to invest in. In fact, in my portfolio, I have biggest position in those tech companies.
Right. I think maybe also to add on to this point, just previously, I think in the mid-year, we had our 6th Wave event where Adam was banging on the table and saying that, hey, a lot of all these AI stocks, it's going to revolutionize the entire industry. And you can see from the stock performances, many of these AI counters have performed tremendously this year alone. Then I think some students or some people in the community are asking, hey, Adam, I've followed you, I've listened to what you've said. I think I've made the assessment that many of these AI names are really game changers. I bought into them and I'm sitting on really, really healthy profits. So is it a good time to take some profits off the table?
Well, okay, so for me, my decision to sell a stock, okay, to me, when I look at a stock, it's a business. And I sell a stock when I see the price going up in a 90-degree fashion. We call that parabolic. So normally after that, if it goes up too fast, it would pull back very sharply. And if it's way overpriced, okay? So I'll give you an example. Like this year, did I sell some stocks that were overpriced? Yes. So earlier on this year, I sold McDonald's because it was overpriced. It went 90 degrees. I sold it for 65% return. I sold Yum Brands that owns KFC for 52% return. And I sold about 80% of Nvidia for 168% return. Because again, these stocks were overvalued and they went up 90 degrees, I sold them, right? But now I'm starting to buy them back. So I started to buy back McDonald's, and I may buy back Nvidia if it goes a bit lower, right? But however, the majority of the stocks I own that are very high quality, like I'll name a few, like Amazon and Meta and Google and Microsoft, to me they are not expensive. In fact, I still think they are undervalued given their future growth drivers, right? And the amount of value they can create for people. On a macro valuation perspective, if you look at the S&P 500, the forward PE ratio right now is about 18 times earnings, which is historically not expensive, okay? If you take away the Magnificent Seven, which is Meta, Google, Amazon, Microsoft, Tesla, Nvidia, and Apple. Take away those 7, of which I own 6. The rest of the stocks in the S&P 500, the PE ratio is only 15 times earnings, which historically is below the historical valuation average. And if you look at the small companies, the small cap, the PE is about 10 times earnings. So I don't know what bubble they're talking about, right? If you look at the actual numbers. Now, if you do a bottom-up approach, if you look at the individual companies in the S&P 500, which my team, we did the research, I'll give you some numbers, right? and this is based on a discounted free cash flow valuation method. Right now, currently, about 29% of stocks in the S&P are fairly priced. Not cheap, not expensive, fairly priced. 55% are undervalued, and 15% are overvalued. So based on our research, no, there's no bubble in the market.
Right. I think one key factor, at least for a lot of investors, their perspective is, hey, if I'm expecting a market to go down soon, maybe I can sell out now and then buy back in later. So I think I just wanted to ask Alson, from a price action perspective, are you expecting a downtrend to come anytime soon?
Well, when I look at the market right now, actually it's undergoing a healthy retracement. Right, we bottomed out last year in October 2022, and then we have a huge rally since then. And to me, I'll be surprised if the market go one line up. Right, and as we all know that nothing goes one line up. And in the last 2 to 3 months, we undergo this retracement is actually healthy. And I do not think that this is the prelude to a major crash, because from the price action perspective, I don't see that there is signs of flush up, which means a rapid price movement, steep upside bars going up in the market, or whether there's signs of what we call bull trap, which I will cover more in my upcoming webinar as well. This special manipulation pattern that the market maker big boys use to trap traders. So right now I think it's healthy, and then after this retracement we will continue higher in this bull run. Yeah.
Right, Alson, also one more thing. I think that was on a macro perspective, right? I think in the 6th wave event, just in the mid-year, just a few months ago, you also floated that, hey, you have entered into some of these AI plays and AI names. So maybe you want to share with the audience what are you currently doing? Are you still holding? Are you still waiting for a more explosive breakout?
Right, so earlier this year I entered a couple of AI-related stocks because I see that they actually form a price action manipulation pattern. I see the big boys was accumulating the stock heavily. So I went in big positions in, I think some of you may know, in during the 6th wave event, big positions in Palantir. I also entered in Tesla, right? So these are the major names in the AI play. And for Palantir, I really cashed out 3/4 of my position, realized about $150,000 of profits. And I'm still riding on the other 1/4 of my position. And based on what I see from the chart, I think we are likely to move higher because there's no signs of bearish price action for Palantir right now. And especially there's a narrative like Palantir, the possibility of Palantir being added into the S&P 500. So I think that will be a major catalyst for Palantir as well. Yeah. So I'm actively looking into China stocks as well, right? Because I believe that, just like October 2022, when the Hang Seng found the bottom, many of the Hong Kong stocks actually did multi-bags return, right? And right now, I think, as everyone know, that the Hang Seng index is coming back almost. I don't think it will go back all the way down to the October 2022 low, but somewhere near there, if it forms a price action bottom, signs of bear trap, which is bullish, I will be actively looking for the underlying stocks, right, that also form similar pattern to trade them back up.
Right.
Yeah.
I think maybe just for some viewers that also hold Palantir as well, do you have a specific price target for Palantir?
Right now, my immediate target is around $40 to $50. Okay, but I will see how the price action goes. For me, the way once I form a conviction on the stock, right, I do not hold it religiously until I don't hold it just blindly, all the way, right? Just like many years ago, right, I have conviction in crypto, Bitcoin, but when they show signs of top, for example, flush up bars or bull trap, I will make my discretion to take profits off the table. So similarly for Palantir, if I see signs of top early before it even reach $40, $50 or even $100, I may size out my position earlier.
Right. Thanks, Elson, for sharing. So I think all the mentors, respectively, have provided their macro perspective into understanding the three key questions: recession, inflation, and interest rate. So I think one of the very most concerning question for many viewers today is that you see, as Adam suggested, the 10-year treasury or some of this fixed income instrument, the yields are climbing tremendously. It's going 4 or 5, some even 5+%. So as a retail investor, people might be considering the opportunity costs in the different allocation of your assets. So a viewer might be asking, hey, why should I be investing? Why should I be putting my money into the markets at the risk that it can go 20, 30% down within a short few months, and not just take the risk-free guaranteed returns, especially from all the treasury bills and backed by the government? So Elson, what do you think of this perspective?
I think it's depending on life stage, right? It's not wrong to invest in T-bills for stability and peace of mind. Like my parents also, because they are really almost retiring, they park most of their funds in fixed D, right? But my father is someone who a bit more aggressive like me. He puts some money with me and I invest and trade for him. So I think that in the long term, if you are at an earlier stage of your life, or you are a bit more aggressive, or you want higher returns, it's still better to have the skill to invest and trade the markets for high return. Imagine if you can compound your returns by 15-20% a year, it will actually double in around 3 to 4 years, which will drastically beat fixed deposit rates even at current levels right now. So in my upcoming Black Market live webinar, I'll be sharing with you guys how I decode the bull and bear traps, right? That's being done by the market makers and how I take advantage of them to achieve about 135% return from a sneaky gap down in a particular stock.
So Elson, what are some of the biggest wins that you have done in 2023? And then also we will maybe contrast it to the 4% risk rate that we're talking about here.
So as I mentioned just now, so far this year, I have entered into big positions in Palantir, Tesla, and also smaller swing trades in stocks like Coinbase. So in total, realized more than about $200,000 of profit so far this year.
Thanks, Elson. So I think also there was this recent term that an analyst created. I think it's this term called T-bills and chill. Meaning you allocate more of your capital to T-bills, wait for the market to sort themselves out, and then reallocate your capital thereafter. So Bang, are you T-bills and chilling now?
Yes, I remember 2 years ago in this very same venue, I used to quote a trendy theme at that point in time. There is no alternative, TINA for short, right? But now, after 2 years, things have changed. And things have changed a lot. There is a serious good alternative right now, which is the T-bill, the US T-bill, where you can earn more than 5% on the short term, like bond, government bond in the US. And for me particularly, it is suitable for my situation where I decided to retire early. I adopt a more balanced approach whereby about 40% of my portfolio is now parked under US dollar fixed deposit and T-bill, where I earn more than 5%. And then the 60% remaining portfolio, I use option to turbocharge my performance. And the way I construct my portfolio that way is to help me weather all kinds of market conditions. It stabilizes when the market goes through volatility, and it also generates disproportionate growth when the market returns to an uptrend, right? So that is how I have changed my portfolio allocations over the past, let's say, nine months or so.
Right, Bang, would you also be able to share with our viewers what are your biggest wins or what are your biggest wins this year so far?
So this year, 2023, my biggest one has been Alphabet, Google, where in one single trade, I made $64,000 or 144%. So that's so far my biggest win in this year. Again, in one single trade, because I have multiple trades in different accounts. So if you combine all accounts, probably is $100,000 in Google itself. And then followed by Meta, $36,000, 156%. Amazon, $20,000, 93%. Microsoft, $30,000, 30% return on investment. And across my own accounts, I have 57% return on investment year to date. Now, the strategy I've been using the most, and also the most profitable strategy for me so far, has been the crouching bull spread, which I introduced last year black market, right? During the black market event. I also reintroduced it during the last 6-wave webinar. So that one has been the most profitable strategies for me in this year. Now, in the upcoming webinar, I'm planning to introduce a brand new strategy where I have tested it for the past 5 months, and the result has been very good. I have done 250 trades as of yesterday, achieving 86% win rate and very good return on investment. So just stay tuned. I will introduce it to you in the upcoming webinar.
So thanks, Bang, for sharing. Now we'll go over to Adam. So Adam, have you been allocating money into T-bills or any of those fixed income instruments?
All right, so yeah, in the short term, treasury bills seem more attractive than stocks, right? So for example, now if you buy a 1-year treasury bill, is guaranteed 5.4% from the US government, right? Versus you put in the stock market, in 1 year, anything can happen, as you know. The stock market can go up 10-20%, it can drop 10-20%. So which is better? Guaranteed 5.4% or up and down 10-20%? So it all depends on your time horizon, when you need the money, okay? So if you need the money in 1 year, then you shouldn't put into the stock market because anything can happen, right? You should put into a fixed interest deposit or the T-bill and get 5%. So for example, myself, I'm renovating my house, and in Singapore it's not cheap, very expensive. So I need to set aside a certain amount to pay my contractor in the next 12 months. So for that money, I wouldn't put into my investments because short term anything can happen, right? So for that one, I put into the treasury bills, okay? But for the bulk of my wealth, I don't need it in the next 12 months. I let it grow, right? So this way I want to compound to even more millions of dollars. It makes more sense to put in the stock market for me, right? Because I know that historically, if you put into the index ETF, S&P 500 index ETF, you're getting roughly about 10 to 12% a year. So if you look at it from a 10-year perspective, would you rather get 10 to 12% on the ETF or 5% on the treasury bond? Obviously 10 to 12% because you compound your money a lot faster. Now, if you learn how to pick individual companies, like for myself, I only pick the top 1% of companies in the market. And I only buy them when they're undervalued. And when I do that, I'm able to compound even more than the index. I'm able to compound it even 20-25% return a year. And because I also use options, something which I actually learned a lot from Bang as well, and I combine that, certain years I can get up to 40% return. Like for example, the last 12 months, I'm up 41% of my portfolio. So that compounds my money a lot more. So in summary, in the short term, in less than 1 year, T-bills are safer than stocks, okay? But in the long run, stocks are safer than T-bills. Because in the long run, if you just put T-bill, you get 5%, you hardly beat inflation. You beat inflation, but you can't grow your wealth, you can never retire. But if you put into stocks and the right stocks, you can definitely compound enough to retire comfortably with a few $1 million, right? So the longer you hold cash, the riskier it becomes. But the longer you hold stocks, the safer it becomes.
I think as Adam shared, in terms of how you look at the different asset classes, if you really do have the ability to stretch out your time horizon, I think equities is still the way to go. So Adam, I think on this note about being able to beat the market and being able to pick all these high quality stocks, maybe you want to share with the viewers what's your biggest win so far in 2023?
All right, so the biggest percentage gains in my portfolio would be for the so-called technology AI stocks would be NVIDIA, up over 160%. In terms of dollars, it's over 150,000 US dollars. Meta, up 77%. $189,000 in terms of profits. Alphabet, or known as Google, up $167,000 in terms of profits. Non-AI stocks would be McDonald's and Yum Brands, up about roughly $40 over $1,000.
Right.
Yeah. So if you want to learn how I identify the highest quality companies, the top 1% of stocks in the market, and the criteria I use to filter them, how I value them, and how do I buy them when they're very undervalued, join me at the Black Market event for my live webinar.
Right. Thanks, Adam. And thanks once again to all the three mentors for sharing the different market insights and how they look at the different companies and how they employ the different strategies. So I think just to really give a very quick summary in terms of what we have discussed thus far in part one of the panel discussion. So I think first and foremost, we definitely talk about the US market environment and whether it's in a bubble or not. And I think the three mentors have already shared their different opinions. We have a market consensus, if I can put it that way, that we are definitely not in a bubble right now. And if you actually peel through the layers, some of these different sectors and some of these different stocks are actually undervalued, as Adam has shared. So definitely do stay subscribed to this channel. As in part two of the panel discussion, I will definitely get Adam to talk a little bit and to maybe throw out some names as some of the viewers might be interested in some of these undervalued sectors as well. So in the second part of the discussion, we then follow on by talking about this phenomenon around T-bills and chilling, where people are saying that, why bother investing in the stock market? Why bother trading options? Why bother trading with price action manipulation? So really, I think as Alson has shared, on top of just reinvestment risks, this ability for you to be able to pick good stocks, having the ability to use a correct strategy to profit from the market will definitely be able to benefit you in the long term by being able to achieve stellar results like the different mentors on the panel today. So we hope that you enjoyed the discussion thus far and gleaned many insights from our different market mentors. So do definitely stay subscribed to this channel as there'll be part two of this panel discussion, and I'll get the mentors to share about the outlook for 2024, the game plan, and more importantly, how to exploit the different hidden market opportunities out there today. So be sure to grab your free ticket to our upcoming live event, the Black Market 2023, where the mentors will be sharing the different methodologies and strategies that they're currently employing on how they hack the markets profitably and how they consistently beat the market. So Adam will be doing a live stock analysis, while Bang and Alson will be doing a live trade hunt, showing you exactly, step by step, how they look through the markets, how they identify opportunities, and more importantly, how they beat the market. With that, stay tuned for part two of the panel discussion. And this is CK from Piranha Profits signing off. As always, keep winning. Bye.